Hi, we're the Affordable Housing Team. I'm Lee Shapiro.
I'm Eric.
I'm Matt. I'm Sadat.
And we also have Michael Blakesley, who has the flu right now, so he is not presenting for obvious reasons.
So in starting our project, we thought it was important to analyze the history of the city over the past century to assess how the housing market has developed over time. And going through the history, we saw Detroit grow exponentially in the 20th century due to manufacturing jobs from the automotive industry as well as the World War II causing the need for the arsenal of democracy, if you will. And this created a strong middle class in Detroit, which eventually faltered throughout the same 20th century as racial tensions, a lack of economic diversification, as well as corruption and other factors led to Detroit collapsing to what it is today with a population of under 700,000 people. And this was also very important in creating the housing market that it has now in the modern day. As the auto industry began paying higher wages to people, creating that strong middle class, they found a need to or a desire to buy instead of rent properties. And this caused to also, this was very easy in Detroit as it was a very large space and the land was very flat, so housing could be built very easily. There was also an increase in ownership in vehicles as it was the auto capital of the world and they had the money to afford it, so they could just buy vehicles whenever they wanted. And this caused the development of a lot of single-family detached housing in Detroit. And this is what's very striking about the housing stock that's there today, as 65% of the homes are single-family detached homes, and nearly 90% of them are very aging structures which are built before 1970. And we found this is termed as adaptability for housing, as these kind of houses are difficult to deal with in terms of repair and maintenance as well as selling, because once they age they're more difficult to sell to other people. And if we look at this graph here, we can see Detroit compared to other cities, it's a lot less diverse in terms of a housing market, and there's not much development of multifamily houses compared to cities like Chicago, Baltimore, Seattle, and all the other larger cities in America. So we thought this was a very big problem with Detroit in terms of having adaptable housing for, say, lower income families to come in and invest in, because the single family detached model was very expensive and difficult to maintain. I'm going to be giving it to Matt to talk about the solution.
Okay, so the first element that we researched when talking about how to solve part of this affordable housing problem in Detroit was kind of where can the people live. A lot of the houses now they're far too big, they're owned by the government, but they're not doing anything with them. There's just a lot of different problems there. And one of the solutions we came up with was the tiny house model. So the tiny house model originated back in the 80s, but it was more of a novelty item, something where people who wanted a less materialistic lifestyle could kind of buy into that. But then after the housing crash in 2008, it became more of a realistic affordable housing option because it's simply just a lot less land, which means a lot less utilities, a lot less upfront costs. And major cities such as Boston, LA, Austin, they started implementing this design where essentially a lot of times it's like a community of tiny houses built near each other, and then generally they're geared towards lower income people, that they're more affordable to them, they move into those, and then we are kind of planning to adopt and change that model a little bit to make it more perfect for the Detroit lifestyle. So one of the big things right now in Detroit is the cost of living is too high. We targeted this number 30% of average median income as our kind of target for, we want people making under that amount to be the ones moving into our tiny house model. This is kind of an industry standard number for affordable housing projects, and it works especially well in Detroit because I believe a little over 60% of Detroit is actually falling into this category, so there are more than enough people to meet our needs here. And then another element of this is often they're more community focused. So another major problem in Detroit is homelessness, which we plan to kind of work on with this project as well. And a big solution towards this is by creating more of a community-based model where it's not simply just a bunch of tiny houses, but there's also community-based things like parks, community washing machines, community festivities, that kind of thing. And we believe if we create more of a community feel, that'll help people feel like this is their home and part of like their community, and they'll be more incentivized to stay in it. And then finally, just to keep in mind with this entire project is it is an investment. It's not a charity. So a big aspect of a lot of previous tiny house model projects is it's more of a charity effort. In fact, there was one in Detroit already, but it was simply create them as cheap as possible and then give them away to people, whereas our model is we want to make sure that we're still making money off of this venture. So we're going to do that in two aspects. Part of it is the social impact bonds, which we'll talk about a little bit later. But then one aspect of the tiny house model is we're going to aim to keep the costs around under $50,000 per model. And by doing that, we believe that over time, tenants, even if their income is under that 30% level, will be able to pay back the value of the house. So essentially, we won't be losing money in that front. And then we'll go into our other aspects of the model now.
So in order to find where possible like locations would be for this tiny house model, we looked in Detroit for where there's population density, existence of housing, anchor institutions like food banks and schools and parks, historical commercial corridors for possible businesses, as well as large open grass areas that could be turned into parks and also could be used to build our houses on. Also, possible access to public transportation. So what we thought was really important was looking at where the population density was. As mentioned earlier, we wanted to create a community, so we thought it would be good to build off some of the community that's already there in Detroit. As you can see, based off of the darker blue colors, that's where the more population density is, and that's where we'd be looking to put this tiny house model. Also, we talked about public transportation. People need to be able to get to work, and you're looking at a map of the bus system right now, and where we would put our model would be accessible for people on the bus. So think tanks and funds in Detroit now have focused in on certain areas that would be possibly good for development. The ones that are yellow are like the stage ones, and the ones that are in orange are kind of the stage two. And these are following the same recommendations that we had: population density, access to public transportation, parks, schools, food banks, all which make the investment more attractive.
Hi, I'm Eric. So we briefly mentioned social impact bonds already. So what a social impact bond is, well, to give you some context, the city of Detroit probably isn't the best at building tiny houses or any affordable housing solution. So basically what a social impact bond does is a contract between a government, such as the city of Detroit, and an independent contractor, wherein they entrust the independent contractor to build the house. And since the independent contractor can likely do it for cheaper, they'll pass along a portion of the savings to that independent contractor. These social impact bonds are funded by investors, and the investors will invest in the independent contractor, who then will build the house and pass along part of the savings to investors, so everybody would make money, and the city would end up saving money on their initiatives. And ideally, these ventures can save taxpayers money, as the city won't have to spend excess money in something that they're not good at, such as building tiny houses, where they might have the expertise as an independent firm. So, as I briefly mentioned already, private investors loan money to the project manager. The project manager uses that money to conduct the project. The independent party, not the project manager or the city, will measure the progress of the social impact bonds upon the terms and conditions and see the effectiveness. And from there, they'll decide if the program is successful, and if it is successful, they'll get monetary compensation along with the return on their initial investment. And in 8 years since the first social impact bonds were launched, a total of 108 have raised almost $400 million and impacted more than 700,000 people. So one example of a social impact bond, one of the first ones, was designed to help prisoners not reoffend. So in the 7 years that the social impacts bond went on, there was a program from an independent contractor who attempted to ensure that prisoners didn't reoffend, and what they found is that the independent contractor was much better at doing this than the government. So they ended up recouping, the people who paid the independent contractor ended up recouping a return on their investment, and also prison reoffending rates went down. So it was just a win-win-win for all parties.
So just when doing research and talking to people in the field, we came up with some takeaways that uncontrolled development will lead to like an exclusion of a like underprivileged population. Detroit's economic trauma really needs to be taken into account when doing development projects within the city. And building on that, community representatives really need to be active, a part of these development projects as well. And a balance of private and public sectors is key to Detroit's future. Thank you so much.
So I guess what I struggle with in this idea is you still have to acquire the land, right? And so I know you didn't go into like extensive detail on a financial model or anything, but like where do you see that being a hang-up? Like I think you said you want to sell them for less than $50,000 a homes, but does that take into account what it would cost? Because like you said, there's already an aging housing base there. So you'd have to, is there that much green space in the city of Detroit ripe for people to come in and purchase and things?
This is Jerry's favorite Detroit real estate thing, is that you could take the empty spots in Detroit and stuff San Francisco and one other city into it.
Right, yeah. We actually wrote a blog post on a similar topic, which is the Detroit Land Bank and all the land they own.
Yeah.
So a major aspect of that is they own thousands of properties around the city, but very infrequently are they actually all connected in the same space, which means that it's very hard to simply buy them all and then start like a huge factory or start a business or something. But what works with our model is, since they are tiny houses, a lot of these properties, if you string just a few of them together, would be enough to build a lot of this land, build a lot of the tiny houses that we're mentioning. And then also because the Detroit Land Bank owns so much land, they frequently go up in auctions and are sold for relatively inexpensive amounts, just because they don't have the infrastructure or capabilities to actually maintain it all. So a lot of it is filled with squatters, it's falling apart, it's basically just more than they can handle. So in a sense, we would be kind of helping out the city as well, because we'd be taking some of this land off of their hands and actually doing something good with it.
A couple of thoughts. One is density. I'm struggling. Density can be high for two reasons in Detroit. One is because a lot of people want to live there, and the other is because or I should say why you get low density. One reason you get low density is because a lot of the housing stock isn't habitable anymore. So it's not as though there's no potential density there. It's not because there are no people there that would live in your small houses. It's because there aren't enough houses to produce the density that you would like. So I don't know what metric you would use, but it seems to me it would be something like percentage of occupied housing. The question is, where is there kind of a neighborhood level demand for other small houses? And I also wonder, this is entirely theoretical. It's like, you made a really good point up front about how single family houses are somehow inherently more expensive. There's a lot of repair to do. It means the density is naturally lower. A small house could be more dense, but it's still a single family house. So you might ask, like, if you were to start from scratch, is single family housing the way that you would solve the problem? Or would you go to something more like a Philly, New York method, where the density is increased because we're not relying on single family homes? I don't know what the answer to that is, but I'll leave you with I have one favorite Detroit real estate figure. someone gave me a few years ago. And that is, would you like to hazard a guess how many mortgages were written in the city of Detroit in 2016? Private home mortgages. It's smaller than you think.
20.
600 in the entire city. And the reason is basically because you can take a house in Detroit that is in crap shape, but you can buy it for $35,000, and you could fix it up, and it would be worth $135,000. But the bank can't loan you that money on the potential, only on the actual value of it. So the only people that are able to take the housing stock and improve it are people that have the cash to do it. Like me, for example, we bought an apartment about 6 years ago in Midtown that has gone up by 50% in 6 years. And the reason we were able to do that is because we didn't need the money. And so what that means is there are people in the city of Detroit who would like to invest in their own neighborhoods that they've lived in their whole lives, but they can't afford to do it. But the lady college professor could move in next door to them and do it and participate in the economic revival because her investment will go up. So I would love to see a solution that was not just based on what is the unit going to look like, but how is the financial infrastructure going to support people that live there all their lives being able to stay there and continue to invest. If we could solve that problem in 5 minutes, we'd be geniuses. But thanks very much for the presentation.